One of the craziest things that I've been thinking about in the last probably couple years is that you can start with a very, very small amount of your portfolio in Bitcoin, and you'll probably end up with a significant amount of wealth in the long term. And I made this spreadsheet to, I guess, illustrate what I mean by this. And you may not like the numbers that I used, and I don't really care. I think if anything, these numbers are bearish because Bitcoin's probably going to have bigger returns in terms of US dollars because the US dollar can keep losing value over time. So in this case, what I did was I made a spreadsheet where I calculated a 20-year time horizon where for the next 10 years, you get a 35% return on Bitcoin. And in the following 10 years, you get a 30% return. And then on the other hand, if you get stocks, you get about a 7% return.
And these are per year returns.
Per year, yes. So that would be, so with stocks, I guess this is after inflation. So the stock market has given 10, 11%. You subtract 4%. I think inflation might be even higher over the next few years, but you subtract 4%, you get 7%. With Bitcoin, I think even these numbers, even if you can account for inflation, these numbers can be much, much higher. So what I did here was I tried to be conservative and I tried to say 35 or 30. And again, people are going to think that this isn't conservative and I don't really care. I think Bitcoin's returns are infinity. Bitcoin is literally going to infinity. So what I showed in this spreadsheet here was that if you start with a certain Bitcoin allocation and you start with a certain stock allocation, you end up with significantly more in Bitcoin over time. So let's say, for example, here we see in row number 8, let me zoom in here. So row number 8, you start with 0% Bitcoin, you start with 100% in stocks, and you end with $0 of Bitcoin, obviously, because you started with 0, and you end up with $403 worth of stocks, right?
So you're starting with $100 allocation. Is that what this is based on?
Let's say $100 allocation. In this case, $100 allocation.
And so that's after 20 years for $403.
Okay. That's correct. And great clarification there. I forgot to mention. So in this case, what you're doing is you're starting with $100 portfolio and you're not investing anymore. So in this case, let's say row 9, you're starting with $1 worth of Bitcoin and $99 worth of stocks. So over time, you see here that the allocation to Bitcoin only grows and it grows. So in 20 years, if you have so on row 9 here, if you start with 1% Bitcoin, 99% stocks, you end up with 60% Bitcoin and 39% stocks. And your portfolio value is significantly higher. So if you have no Bitcoin, you have $403. If you have 1% in Bitcoin, you have $1,000 and so on. And it keeps going. The difference between having 0% in Bitcoin and having 100% in Bitcoin is massive. So you go from $400 in your portfolio to $60,000 in your portfolio. And again, this is with a $100 portfolio. So again, these numbers may seem crazy to you, but I think 30% is on the low end. What do you guys think of this?
Well, they seem crazy, but if we look at historical results of Bitcoin and stock market, then they're not. They're actually incredibly tame because Bitcoin is such a crazy rise from the beginning. So it would be even higher if somebody put $100 into Bitcoin, from the start or from different periods of time till today. It'd be even higher than this. So it's really not that crazy, actually. Which, so again, seems crazy. $60,000 from $100 investment. That's wild.
So if you start with 5% in Bitcoin, you end up with 88%. If you start with 10%, you end up with 94%. That's crazy. That's wild to me because in the long term, everybody's going to have a lot of Bitcoin, but depending on your portfolio value, depending on how much you start off with, is what really determines your time horizon, right? So let's say go ahead.
Yeah, I was just going to say this makes me think about the institutions that are getting into Bitcoin, and a lot of institutions like pension funds have allocated to Bitcoin, but they have serious mandates about what they're allowed to invest in, or they have sort of this self-imposed restrictions, a lot of these institutions, and they say, oh, well, we need to be exposed to this new sector and this new investment, so we're going to put in between a 1% and 5% allocation. The other thing that institutional investors do is they rebalance. So you can see that this is, a 5% allocation within 20 years runs up to 88% of the total value of a portfolio if it's Bitcoin versus a 7%, basket of stocks. If you rebalance that, you're losing out on a huge amount of that portfolio value. by rebalancing something like this. Like you're selling the winner and buying the losers when you rebalance out of Bitcoin.
Yeah.
Oh, Jory, you're muted, or you can't hear you.
The frickin' mic got me again.
Works.
Oh, well, at least I had somebody here to tell me this time. I don't even know what I was going to say there now. What were we talking about? Sorry, boys.
I was talking about the
rebalancing.
rebalancing with the institutions.
Oh, yes. Okay. I was going to say, I think they do that because that's the way that things have always been. When something's running hot, you take some profits out of there, you spread it into something else. But that was before Bitcoin existed. And people might look at the S&P 500 chart and say, well, it's only gone up for the last 50 years. Yes, in fiat, it has only gone up. But if you look at that in Bitcoin terms, it's actually been going down significantly. And by the looks of this spreadsheet, it will continue to do that. So $100 invested in the stock market for 20 years, you get a $400 return. Is that what that's saying, Rajat?
Yeah.
Total.
So you end up with $403, but $100 in Bitcoin, you end up with $60,000.
And I think that would actually be one of the companies, well, with like a lower PE ratio, right? If it in 20 years you get 4x your return, that's actually a lower PE ratio than some of these other stocks offer. And
this
I
would
think
just be with the S&P 500. So 7, like the index funds.
the index of that, right? Yeah, and I think that people, the other part of that too is like if you think about the amount of people who are going to work every day and putting money into their pension, their forced retirement fund, which is forced buyers for this market, which I expect to go down significantly over the 20 years as well. I think that this is like best case if you're owning stocks because it's getting cheaper and cheaper. There's more competition. There's going to be less people. There's going to be less forced buyers because as we saw the report yesterday, I think almost 1 million people, 1 million Americans lost their jobs. And that trend isn't going to go the other way. Like humans are going to start replacing AI now. Like this is a one-way street. And so I think that this is pretty conservative. I think that Bitcoin's going to return much more than 35%. And I think the stock market's going to return much less than that in real terms, especially.
I think what's going to happen, I just want to piggyback off that. I think what's going to happen is that people think that's ridiculous that, oh, how can the stock market return less? But I think what's going to happen is that we're going to see small businesses that can compete with these big businesses and they don't have the same costs. So let's say, for example, we have a small burger company. They won't have the same franchise costs as a McDonald's franchisee. Right. And that's like the barrier to entry. With McDonald's, you need to make this amount of profit in order to do well or to even run your business. But with this smaller burger company, they don't have to do that. Right.
That's such a good point.
Yeah. We're going to see this disruption in everything. Right. As you get bigger, it gets harder for you to actually make a profit. Like Walmart. Think about how difficult it would be for Walmart to make a profit if they didn't have the same network effect that they have today.
Yep.
Right.
And the other part of that too, Rajat, that got me thinking now is like, what in the past, because when we're talking about costs going up, when restaurants raise the prices of their burgers, it's not because they're more greedy, it's because their input costs are going up. And those input costs are not going to go down. They're just going to keep going up. And eventually they're going to come a point where people just can't afford to buy those anymore. Yeah. And I think that when you're dealing with something like that, let's use McDonald's as an example, like a big part of their monthly cost, their fixed cost is actually their franchise fee. And so when you're dealing with these lower and lower margins to remain profitable and competitive, you want to get rid of anything. And so franchise fees, what was the value of a franchise fee before? Well, number one, it was brand awareness. They had bigger dollars to advertise to a bigger population. The other thing too was systems and processes. And so both these things now, you could hop onto YouTube, you could hop onto Instagram, Nostr, whatever it is. You could actually have a more viral video than McDonald's would by paying $0 for that. So that one's gone. The second one, you could actually have an AI system now, design a whole process, HR guide, legal things, everything in 10 minutes that you would have been paying for in franchise fees before. So 100% agree with that theory that it's going to get harder and harder for these big, fat, bloated companies to stay competitive when you have the ability for the little guy, the small business to actually come in and say, you know what, we're going to make these better. We're going to use different ingredients. We're going to grow organically using things like Instagram and, whatever else. And we're going to use AI to design all these things that we would have otherwise paid for in your franchise fee.
Yeah. The other thing here too is Bitcoin is actually going to take a lot of the value out of other investments, because there's a lot of people just saying, well, I can invest in the S&P 500, just like throw my extra money in there, and it'll return at 7 to 12% annual on average, and it's going to just do its thing, and I don't have to think about it. I think less people that are in that type of investing mindset are going to see, oh, well, I can do that with Bitcoin, but instead of 7 to 12%, I'm going to get 20 to 50%. And it's just like, why not do that instead? And when people do that, they're taking out the value from the stock system, like the stock market system, and that is less buyers, less demand on those shares, which means the share price goes down. So I think Bitcoin itself will actually demonetize part of the value, and therefore make it so that the returns of investing in these companies will continue to be less, actually, as well.
And it's going to be the same with real estate too. Like I talked to somebody yesterday in England. He had the choice between buying a rental home and buying Bitcoin, and he chose Bitcoin because he thought it through. He understands what Bitcoin is. He understands how less of a headache it is. There's less costs. There's no property tax. There's no tenants. All these different things. As people come to the same conclusions that we've come to, it's going to suck demand out of all these different markets, S&P, real estate. And so that's going to drop as people are starting to sell those assets. Where's that going to flow into? Bitcoin. So some of these numbers that Rajat has there, in my opinion, are extremely conservative, not just based on that new demand coming in, but just the amount of people who actually understand Bitcoin today is so small.
Mm-hmm.
So small. We're in our own little echo chamber here. I like talking to you guys about this kind of stuff, but you go down the street or you go to the bar or to a sports game, everybody's like not even on the same planet. And so they're all going to be, though, and they're all going to show up at some point. And there's all this land in cyberspace that's available right now. And as people are still figuring this out, people like us and whoever watching this video is buying up this land for pennies on the dollar. And they're just going to keep going up and up and over for the next couple of decades and beyond that.
Yeah. Do you mind sharing my screen there, Jor?
Oh, yeah.
I want to show something.
It's crazy to think of, like, this Bitcoin, in the future, in 20 years, is worth that. Like $100 is worth $60,000 at these metrics, right? So that means that it's actually worth that today, but you're just able to get an incredible discount. And if you have time, you can extract the value. As that time passes, you can extract that value out of it by the value gaining in the Bitcoin that you bought.
And people think that, the stock market is so safe, it's so secure, there's no way it's going to go down. It's always going to keep going up. But you can see here that there are other stock markets in the world that, like you can see here, this is the Nikkei in Japan. It was down in 14 years. It was down 78% in, let's see here. How many years is that from? Oh, that's 20 years. It's down 80%.
What year did it peak?
It peaked in 1989.
Wow.
Now it's back up, but like
only
look at
barely.
Yeah, barely. Exactly.
When that was like in the 2022, 23 maybe that it finally hit the peak again.
Yeah, and so the sad thing here isn't like,
oh my God,
we're not even saying that people would have bought up here. Like that's not even what we're saying. What we're saying is that if you had bought here, you have to wait. Like you're not going to make money in this period. In this whole period of time, you're not making anything. Your purchasing power is falling, right? And most people wouldn't even buy.
And this is in fiat terms too. This is not against gold.
Yes.
Oh wow, yeah.
Imagine seeing the same chart against gold.
Right. Basically any other asset that's slightly scarce, like even real estate, pricing this in real estate even. I mean, geez, pricing it in other stock markets. I mean, this is brutal, right? This is that's 20, what is that, 20 years? No, that's 30 years. 30 years. That's like somebody's almost entire working life could just be lost from not being able to have an investable asset, basically. So
if you had bought here and you waited until like a few months ago,
today,
you would have still been down 1.4%. Look at this, 35 years.
Crazy.
And the reason why I'm not showing this because I think that this is going to happen to the stock market. I'm showing this because I think people underestimate that this could happen to the U.S. stock market. I don't know if this will happen, but anything is possible. Literally anything is possible because you don't know where the market is going to go. How do you know that? Let's say who owns the most stocks right now? Probably boomers, baby boomers,
Mm.
maybe
Oh yeah,
Gen X,
100%.
right? Baby
Boomers.
boomers are starting to retire and they want to sell their stocks. Are millennials and Gen Z still buying stocks? I don't even think they have money to pay for food.
That's exactly the question, right?
Right.
Like if somebody's selling, they need somebody else to buy at that
Yes.
price to not, like, a willing buyer at the exact price of the market to not affect the market either way. If the
Yeah.
willing buyer is below the market price, then that's where the price is now set. If it's above, if the willing buyer is willing to pay more, then it'll go up. But if boomers are trying to sell their stocks and nobody is stepping in to buy it, the price is going to go down. Like that, generational shifts are pretty important for like the the global macro scene, right? Like,
Yeah.
I don't
Can
know,
we
this
actually
doesn't
go
look
into
good.
why it would go down? Like why? So the way that I see it, it would go down because they're going to panic. They want to pay for they need to pay for food,
Yep.
and their social security isn't paying for it, and they need to pay for food, so they need to get rid of those stocks ASAP, and they'll just sell at they'll sell at a market order, so they can go to the grocery store and buy food. Right? It's not
Yeah.
about it's not about us wanting this to happen. It's about the fact that people don't want stocks anymore. A lot of people who talk about index funds, they don't even talk about the concentration risk, right? They say, "Oh yeah, just buy the S&P 500. Just buy the S&P 500. You'll be fine. Don't worry. America is the best country in the world." How do you know that the US government isn't going to say to all of the companies in the S&P 500 that they have to pay an extra wealth tax? But all your plans, there's this Mike Tyson quote. Everybody has a plan until they get punched in the face. What are you
Mhm.
going to do? What are you going to do if you have real estate today and the government in your region says we're going to charge you an extra 5% property tax this year because we need it. Otherwise, we're going to go bankrupt. We need you to do this. We need you to support your property's value is going to fall immediately.
Mhm. Yeah, you don't want to become a distressed seller, which is what can happen, right? If there's enough people being forced sellers,
Yes.
then they do that in a distressed environment, and it creates a cascading effect. It's why market crashes are typically a lot shorter of a time period. They happen in a shorter time period than market recoveries. Bear markets are like condensed in a really short period because it's sort of like this flywheel effect of selling creates more selling, and then there's panic, and if nobody steps in, if nobody backstops it, like printing a bunch of money to incentivize people to go spend money and try to outpace the inflation that they know is coming, and all sorts of different things that creates. But basically, that happens really quickly, and then it usually recovers a lot slower, and over time will nominally increase higher. But as you can see in the case of the Japanese market, it took 30 years to nominally, that they were just in a crab market, eventually recovering in a nominal sense.
That's brutal. See, you mentioned distressed selling there. That was such a great word, such a
Mhm.
great, I guess, phrase. This is distressed selling. This is the US dollar priced in Bitcoin.
Yeah.
Wow.
This is Bitcoiners wanting to get rid of their US dollars and not wanting US dollars, right? This is what it looks like. This is what the S&P 500 is going to look like when nobody wants the S&P 500.
When I have dollars, I feel pretty distressed, to be honest, because I know that I'm not
Yeah.
holding Bitcoin.
You're causing this.
Yeah.
You're the reason for this. Let's see CAD.
Well, that's a crazy. Oh, yeah, there we go.
Forrest, you're making this happen.
I am. I absolutely am. I mean, look, it says
I'm contributing
100%.
too.
It says
Yeah,
100%.
blame the Bitcoiners, man. It's all
So
their fault.
is that saying you can get 600 sats for $1? Is that what that's saying?
Yep.
Yeah, I
That's
think so.
crazy.
Is that accurate?
Yep.
I think it is. Yeah, it's been within 600 and something. So with Bitcoin going up, maybe it's 600. Not much.
This is gonna fall like this. This is a countdown, right? It started off at infinity, and infinity didn't seem like it was too high at one point. People were buying their Bitcoin at one point at that price. But now, I mean, this is a countdown. This is gonna go to 59, 58, 57. At some point, they're gonna have to add a 0 to the right of the decimal.
Yes.
Whereas with
milli
Bitcoin,
satoshis.
yeah, exactly. Like even for this is going to go from 60 to 6 point to 0.6 to 0.06. It's going to keep falling forever.
It's already a ridiculous number. I mean, I can't, it's hard to even look at that many zeros and figure out what it's worth. Like, we need to be on the SAT standard already at this point. Like,
yeah,
the Canadian dollar is just worth so little. Yeah.
Yeah.
There it is, 635 sats per dollar. And anybody that says, oh, Bitcoin's 113,000 US dollars, that's crazy, I can't buy any Bitcoin. You can get 635 sats for 1 Canadian dollar that will continue to go down in value, and those sats will continue to go up in value.
Yeah. Yeah.
By
Like
a
at
lot
one
of stats
point,
still.
I remember when I was doing Uber in 2022, and I was doing as many orders as I could. At that time, like think about it, I would get $10 an order, let's say. I was getting 40,000 sats per order.
Crazy.
That's insane.
Yeah, I mean, it was pretty monumental for me, like thinking about how $1, and this happened obviously with Canadian dollars sooner, but $1 was worth 1,000 sats. And I was like, oh, this is so easy to use sats as a unit of account now.
Yep.
And now it's like, well, now I got to half that if I want to try to use sats as a unit of account.
Yeah, the dollar's melting too fast for us to keep up with it in our heads, our mental math.
Yeah.
It's the same as anything. Like everything, I don't know what we're going to title this one today, but Rajat said pretty early on here that Bitcoin is literally going to infinity, and it is. And it's not because, it's becoming that much more valuable, but every day there's new people joining the network, which drives up the demand, but you can't print more of it. And so everything else is going to fall comparison to it. The stock market, real estate, gold, probably over time. Our wages, it's kind of crazy to think about now, but like today is probably the most real money that you'll ever make. You're just going to become worth less and less and less over time. And so when you want to store that time and energy in something that's not going to melt away, Bitcoin is the solution to that. And you look at that chart that Rajat shared there, where it goes up and down and up and down and then just drops and stays there for 10 years. If you can look at that chart and not think that something is wrong with that currency, then I don't know what to tell you. You've been fooled, my friend. You've been fooled, and your life is about to get worse and worse and worse, while Bitcoiners are going to be on the flip side of that, where things are going to get cheaper and cheaper and cheaper in terms of Bitcoin over time. As technology improves, as it gets cheaper in real terms to create things, Bitcoin wins. And in a world where everything else can be created to match the demand, you can create as much supply as you want to keep up with demand. You can't do that with Bitcoin. So these are two different things. When we were talking about the rebalancing there, that's the old system. That's the old methodology. Not in this world, though. You cannot create more units of it. So whatever ownership you have in that network, it's only going to go up. It cannot go down. And the flip side of that is fiat, where you own a part of that network, it can only go down. It cannot go up. So these are two different worlds, two different planets. Hopefully people are joining us here on Planet Bitcoin, understand what we're saying. But what do we got here? Diversification. Never heard that one before.
Where you, so basically you're diversifying. You're selling the winner to buy a loser, right? So let's say
gotcha.
if you had that's what Bill Gates did, right?
Gates, yeah.
Were you going to say the same? Wow, that's so funny.
I was, yeah. Warren Buffett famously convinced him to diversify out of his massive holdings of Microsoft, and Steve Ballmer didn't, who was like a CEO after Bill Gates, and I think he has more wealth than Bill Gates at this point, I believe.
Wow, this is Steve Ballmer. This is
150 billion. Wow.
Yeah, I mean, Bill Gates has given a lot of his money away, and through his foundation or whatever. Too. Yeah, but a lot of that is because he bought a bunch of other crappy, less desirable, less scarce assets than his Microsoft shares, right? That underperformed the Microsoft that he owned. He diversified. Yeah,
that's it.
What a fool!
So don't listen to Bill Gates. Don't diversify. Don't listen to Warren Buffett.
Yeah, which is crazy. I mean, but it's true. And I think I just want to touch again on something Jor was talking about, which is just that there's nothing more scarce and desirable than Bitcoin. Everything else is easier to create more of. So the shares in the S&P 500, the companies that get included, there's more of those. It's easier to create those. It's easier to create the excess shares than it is to create more Bitcoin. There's a limit to the amount of Bitcoin being issued, new Bitcoin, and there's a max supply, which will, in every 4 years, it becomes twice as difficult to acquire more new Bitcoin every halving event. So there's the max sats right there, right? It just, you want the scarce desirable assets so that you can buy the easily produced non-scarce assets with them, because those will just get cheaper and cheaper compared to the scarce desirable assets that you hold. It can be really that simple.
Yeah. It's so crazy to me. People are willing to accept paper for the best asset in the world. Pieces like in Canada, it's not even paper. You can't even start fires with it. It's plastic. It's
But
melts.
even with that paper, though, you can still convert it to sats, though.
Yeah.
Which is crazy. Somebody's willing to
it.
accept that for Bitcoin. That's crazy. Every time I do that, I feel like I'm cheating somebody. Like I feel like I'm getting one over. I am, yeah, and it's fine because they're willing participants. But and the other thing too, right, with this is just that like those charts of those dollars, like they're 99% down in Bitcoin. They can continue to, they can do another 99% down, right? Like it can just, it could do that forever as long as people are willing to accept it for Bitcoin. But I think there's a point where people finally wise up enough to say, I don't actually want your paper. I'm going to throw this paper or plastic on the streets like they did in Venezuela not too long ago, or make hats out of it, right? There are people folding the bills and making useful things out of these bills because they realized, hey, this is just paper and it's backed by a government we don't trust and believe in anymore. That can happen anywhere in the world, but you can't do that with Bitcoin, right? The Bitcoin is the exact solution to that problem. And that's why fiat currency can continue to fall 99% over and over and over, priced in Bitcoin.
So you got a culmination of things here. You have AI taking away jobs, which is going to be less money flooding into the S&P market. You have technology improving and more competition, where some of the big Meg 7 companies are technology companies. People are going to be able to spin that up. Forrest made a website, or not even just a website, like a really cool website in a couple hours. And
it was 2 days, but like I'm not a coder, and it's something that I would have paid somebody, a lot for at a certain time, right?
And that's what's derived all this value from all these companies in the stock market. Like we're talking about the S&P here, but at the same time, like there are so many companies out there with like not only producing nothing and not very profitable, but also holding zero Bitcoin and storing their reserves in fiat. And so they're just going to keep melting. And so going back to like kind of what we're talking about there in terms of not believing that people still accept fiat. I mean, it's one thing to say, I accept it, but you can still convert it to Bitcoin. There's still people willing to accept fiat. But the only thing that matters in my mind, especially when we go back to the original spreadsheet here, playing this out 20 years, that's a store of value. That's what you're thinking about there. And that's what you want to store your value in, is something that's not going to deteriorate, that is actually going to increase. And the reason why it's increasing is because your ownership in that fixed supply number that I showed there is going to continue going up forever. So there it is. Sell your stocks, put them into Bitcoin. And the crazy thing is that as that creates a cascading effect with it, more people are going to be selling their stocks. More people are going to be buying Bitcoin as more and more green lights around the world turn on. Who knows? Rajat might be crazy with these numbers. 35, it might be double that. It could be triple that. We really have no idea because we've never had something like Bitcoin before. So this is our best guess at it, but we could be way out to lunch here.
Yeah, and what another thing this makes me think of, right, is there's a lot of people who have some allocation to, a bunch of different stocks, and they become, attached to them. They think, oh yeah, Robinhood is going to do really well, and all these different things. Like, of course, that's all possible, but these aren't assets that are going to last a lifetime or multi lifetimes. Bitcoin is a 1,000+ year asset, and when looking at this, it's really just really simple to me that anything that you don't have absolute incredible conviction on for a long period of time, you just move that into Bitcoin. That initial Bitcoin allocation thing there should not be 0. It probably shouldn't be 1 or 2 or 3 or 4. It shouldn't be single digits, right? It should creep up. It's going to creep up if you have any, right? Over time, it becomes more and more percentage, as we saw by the spreadsheet. But your initial Bitcoin allocation should be pretty high, because the higher it is, the better.
Should it even be double digits?
Yeah, exactly. That's the real question there. Should it be triple digits?
That's actually something that's interesting. So I wanted to talk about that quickly. So if you start with 1%, you end up with 60% in 20 years. So let's say, for example, if you go from that 60%, you go from 60% to 99.56% over another 20 years. So it'll take you 40 years to go from 1% to 99.5%. That's crazy.
So just start at 99.5, and then, it's like, it's basically not measurable. Like, I mean, it's just insane. Like, if you started at that, right? Like, what if you started at 99? Like, if you start at 99 and then go over to the total value of your portfolio, or your total portfolio value is 60,300, and you start with $100. It's like, that's what you want to do. Like, we all want to be really wealthy.
Yep.
And not because of just because, we should be able to store our value. If we put in work, we put in time, we create value, we should be able to store that value. And we are born at a lucky enough time to be able to still be in the adoption phase of this asset. And, you should take advantage of that. Why not?
Yeah.
It's not hurting anybody to take advantage of this. It's only helping you.
Yeah, that's the whole thing for me, is like, when this eventually plays out, where the world has woken up to the fact that Bitcoin is the greatest asset that's ever existed before. When that happens, the gains will start coming down. And even at that point, though, you're going to be able to take whatever you earn, whatever value you add, you're going to be able to store it in Bitcoin, and it's not going to go down. Even though it might not see 40% a year returns or 80% returns, that's kind of like the adoption phase we're in right now. That's the whole opportunity here, is that as the rest of the world figures this out, you have the ability to accumulate land in cyberspace, essentially. But once it's all been claimed, that doesn't change anything. We're still going to be able to preserve our purchasing power in a way that cannot be debased. Your ownership of that network will never go down in 50 years from now, in 500 years from now. And that's a pretty important thing. As a human being, to be able to go to work and to store that time in something that somebody else can't devalue and steal from you.
Yep.
Yeah.
So it's pretty cool. All right. Any final thoughts here, fellas?
Buy Bitcoin.
There it is.
Yeah. I mean, that barely needs to be said after this, to be honest. It's so obvious. Like, it's
so
staring,
obvious.
It's staring everyone in the face. It's been obvious. If you have reservations to doing so, to buying Bitcoin, to allocating to it, address those. Figure out what, what happens if the internet goes down? What happens? What is keeping it decentralized? What is a node? All these questions you have, begin to answer them. As you answer them, you will understand why the three of us and thousands of other people have fully allocated to this thing.
Yeah, and I think that's one of the things that we do really well in our community. I've heard a lot of people saying that joining the community, you see the link on the bottom of your screen, joining the community, it costs a little bit of money up front, of course, but over the long term, it's going to take you from having a 0% allocation to Bitcoin to 100% allocation. And you're not going to have to wait 20 years. That's the greatest part. You're going to do it on your own, and you're going to do it manually by making the decision yourself.
Yeah.
Yeah, and you learn from people. You have a bunch of people who have your back. You have a bunch of people you can chat about this stuff to, because I'm sure if you're a Bitcoiner, if you're anything like me, you feel like you're going a little bit cuckoo some days, because in the real world, nobody's caught on to this dirty little secret of everything else is effed and Bitcoin is the solution. So when you can have actually, productive conversations, you can collaborate with people, you can build things. That's what happens in a community. So number one, whatever you have in wealth, convert the majority of it to Bitcoin. Financial advice. 2, join a community like Maple Bitcoin, or there's a lot of good communities out there, but make sure you have other Bitcoiners in your life that you can bounce ideas off of and everything. So we created a Maple Bitcoin School community here, and we've received a lot of good feedback, and we're kind of in like the very early stages of it too. And we think it's going to evolve into something that's going to be pretty special. We want to have a Bitcoiner in every country on this planet within the community, and just imagine what we can do with that. So we're kind of just getting things going, but if you'd like to be a part of that, you can go to that link right there, and we'll put that in the pinned comments too.
Yeah, the school is going to speed up your process
Yes.
of understanding and everything. But if for whatever reason you can't do that, and you're looking for answers to those questions that you have about Bitcoin, make sure you validate those answers. Make sure you check them twice, verify them, not validate, sorry. Make sure you verify them, because there is people spreading whatever information for their own purposes. You know, there's all these altcoins, all that kind of stuff, right? Be careful out there. And that's what the school also does here, is that it's concentrating all of this education. We have the master classes on there, which do an incredible job at getting people up to like, you know, beyond a beginner understanding of Bitcoin really, really quickly within a couple hours. You can vastly know more about Bitcoin than a lot of other people that already own the asset, from joining the school and participating in the classrooms and checking it out. So, yeah.
Yes. And it's one thing we say all the time is like, there's an abundance of information out there. It's all free. So if you don't have the resources to be able to join something like that, it just takes time. You can figure out all this stuff on your own. The difference that we provide is we give you the actionable steps to do it in. We have the support there. And when we see things like hacks coming up or security vulnerabilities or whatever, there's always somebody that's going to point that out, and you're going to be on top of things. And I think the worst thing that you can do at this stage is take all this time, all this energy, convert it to Bitcoin, make one small error, and everything's going to be gone. You got to restart over, and you're never going to have the amount of sats that you have today. So that's the value of a community. That's what we wanted to talk about today, and that's what we're building right now. So thanks everybody for watching. Thanks, fellas, for another great chat here. And if you do feel like supporting the channel, you got anything from it, learned anything, laughed at a couple of Rajat's jokes, you can scan that QR code right beside his head there. And that's going to the Maple Bitcoin Strategic Reserve. So thanks, fellas. We will catch you on the next one.